Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's break down today's market price action. Quite a day in the market, so let's just jump right in. As always, we're going to start with our top-down analysis, take a look at what's happening in the broader markets, break it down to sector analysis, and then take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis here, let's just jump right into the numbers. And it was a bit of an ugly day today, and that was just because of that CPI report we got this morning. That CPI report was stronger than expected. And again, these are back-to-back strong numbers, which is really pushing down the timeline for rate cuts that everyone was so anticipating on. So quite a bit of change there. And looking at this movement today, Russells were the underperformer. Now, if you take a look at the broader markets, you can see that markets are now looking a little bit weak. We can't say that market looks really bearish because, again, we are right between the 20 to 50-day moving average. We are kind of going sideways. It was not a big ugly day like we had over here. But today's price action, we're just kind of making us a bit in the sideways range here. So I think in the next week or so, we just really have to pay attention to what the broader markets are doing along with what the bond yields are doing, because they will some sort of have an effect on each other. So things to kind of look out for the next couple of weeks. I think we have to be a little bit more cautious, especially it should have been more on the bullish side. Now, if you just take a look at the numbers today, you can see the numbers were down across the board. Dow Jones down 1%, more than 1%. So is the S&P, so is the NASDAQ. And the Russell really took the big hit at 2.73%. Again, rising interest rate, not a good news for the Russell. Now, on the other hand, oil doing well, and gold, which was really doing well before the news came out, did suffer some losses. So, good price action across the board, especially if you caught that move on the right direction. Here we are. The NASDAQ looks kind of more on the bearish side as well, just hanging on the thread by that 50-day moving average. So, overall, markets looks a little bit more on the cautious side here. If you take a look at the advanced decline ratio today, it was a pretty ugly day, 82% down, only 15% up. Now, taking a look at above the 50-day moving average, we are kind of sitting split here, 51 below and 49 above. So I think this is a good market where you really have to pay attention to the relative strength and weakness. Buy the outperformer, sell the underperformer. That's just the way to go it. And if you take a look at the heat map, you can see it was a red across the board, especially in some of the financial sector. We got some of the reds over here, and then again, so the big names were okay. Meta, Google, none of those suffer big losses. But outside of that, the little ones have a little bit more losses here. The best sector right now looking is the energy sector, and that's again something we'll be taking a look at when it comes to the stock picks. Now, looking at our market outlook. This again brings our outlook down to a 0 because again, below the 20, above the 50, and we're kind of going a little sideways here. And as far as the monthly outlook goes, again, we got to bring that bullishness down. I think this is where you get to decide, okay, how aggressive I want to be. I think at this point, I don't want to be aggressive either way. But if the markets start to break down a little bit more, I think that will be the time to really pull the trigger or turn the lever more towards a bearish side. Now, for the potential trades, I got some bullish, one neutral and two bearish. I want to highlight that I really like the energy sector. So, either you can take a look at USO, CVX, COP, Oxy. Some of them are doing really well. So let's just jump right into the charts here. And here's the first one, the USO. I just like this overall. Nice little high base setup. A break above that, heading towards the 84 to 86 is what I'll be looking at. We got the 20 and the 50 rising here. Again, this is something we're looking at the outperformance here. Now CVX, same thing. You can see that beautiful bullish price action. Look at the shadows that we're getting, and then they're covering very fast. Even a day like today, this one did well. So again, outperformance. Now, looking at the weaker ones, I like some of the financial stuff, especially the MasterCard that was actually underperforming. You can see that below the 20 to 50 moving average. I don't mind taking a look at bear call spread on this one. And even we can take a look at just the direction bulls. Again, you can see that things are weakening. So, some of the bear call spreads on this one would work as well. I think at this point, like I said, I'm more focused on what's the outperformance and what's the underperformance. And we don't want to be jumping too much far left or too much far right. So cautious outlook in the equity markets. We've got a couple of employment report. We got the claimants. We got the unemployment claims report tomorrow and the PPI. Overall, again, watch the yields because now yields is going to weigh down on some of the stocks or some of the equity markets. We still have a few earnings tomorrow. SEZ, Fast, CarMax. Things to kind of watch out for. But I think at this point, the focus is on broader markets, the broader theme, and see how things turn out. Do we buy the dip here, or the market really get worried here? I think that's something to pay attention to, and maybe perhaps see PPI tomorrow could fuel the fire as well. Thanks for watching, and we'll see you the next one. Happy trading.